The impact of climate change on global markets. Introduction. Climate change has become one of the most urgent and transformative challenges facing the world today. Its effects are already being felt across various sectors, and its future impact is expected to be even more profound. Beyond environmental concerns, climate change poses a significant threat to global markets, affecting everything from commodity prices and supply chains to financial stability and economic growth. As natural disasters, rising temperatures, and unpredictable weather patterns become more frequent and severe, businesses and governments are grappling with how to mitigate these effects while ensuring sustainable economic progress. This article will explore the impact of climate change on global markets, focusing on the key areas it affects and the strategies that can be employed to address these challenges. Number 1. Understanding the relationship between climate change and markets. Climate change refers to long-term changes in global weather patterns, particularly the rise in global temperatures and the increasing frequency of extreme weather events. This section introduces how climate change directly and indirectly influences markets by altering production processes, demand patterns, and investment behaviors. Understanding the relationship between environmental changes and economic systems is crucial for predicting the long-term effects on global trade and finance. Number 2. The economic costs of climate change. The economic costs of climate change are vast and multifaceted. Extreme weather events such as hurricanes, floods, and droughts can cause significant damage to infrastructure, property, and crops, leading to billions of dollars in losses. Additionally, there are long-term costs associated with rising sea levels, water scarcity, and heat waves, which can affect industries such as agriculture, real estate, and insurance. This section will explore the direct and indirect economic costs of climate change on various sectors. Number 3. Climate change and global supply chains. Global supply chains are highly vulnerable to the impacts of climate change. Disruptions caused by natural disasters, resource shortages, and changing weather patterns can lead to delays, higher costs, and reduced efficiency in the production and delivery of goods. This section discusses how businesses are adapting their supply chains to be more resilient to climate-related risks and how such disruptions can have ripple effects across global markets. Number 4. Impact on agriculture and food security. Agriculture is one of the most climate-sensitive industries, and climate change is already affecting crop yields, livestock production, and food prices. Rising temperatures, unpredictable rainfall patterns, and extreme weather events are threatening global food security, especially in regions that rely on stable growing seasons. This section will explore the impact of climate change on agriculture and the implications for food prices, global trade, and economies that depend heavily on agriculture. Number 5. Shifts in energy demand and production. Climate change is also influencing the energy sector, both in terms of demand and the production of energy. As temperatures rise, there is an increased demand for energy to cool homes and businesses, while simultaneously, climate policies are pushing for transition to renewable energy sources. This section will discuss the dual impact of climate change on energy markets, including the shift from fossil fuels to clean energy and how this transition is affecting investments and energy prices globally. Number 6. The role of carbon pricing and emissions regulations. Governments around the world are implementing policies to combat climate change, including carbon pricing mechanisms and emissions regulations. These policies are designed to reduce greenhouse gas emissions by incentivizing businesses to adopt greener practices. This section will examine how carbon pricing and regulatory frameworks are impacting markets, industries, and investment flows, as well as the potential for these measures to accelerate the shift toward a low-carbon economy. Number 7. Insurance and financial markets. Assessing climate risks. As climate-related risks become more evident, the insurance industry has begun to reassess its exposure to environmental risks, including extreme weather events and long-term environmental changes. Insurance companies are adjusting premiums and coverage options in response to the increasing frequency of climate-related claims. This section will explore how climate risks are being factored into financial markets and how insurance companies are responding to these challenges, as well as the role of financial institutions in financing climate adaptation and mitigation. Number 8. Impact on global trade and investment. Climate change is influencing the global trade landscape by affecting the availability and costs of resources, disrupting trade routes, and altering market demand. Investment in climate-resilient infrastructure and low-carbon technologies is becoming increasingly important. This section will analyze the implications of climate change for global trade flows, the shifting patterns of international investment, and the opportunities and challenges for businesses investing in climate adaptation. Number 9. The transition to a low-carbon economy. The global transition to a low-carbon economy is being driven by both regulatory pressure and market demand for sustainable products and services. This transition is reshaping industries, particularly those that rely heavily on fossil fuels. This section discusses how various industries are adapting to the shift toward sustainability, the emerging opportunities in green technologies, and the financial implications of the transition to a low-carbon economy. Number 10. Climate change and financial market volatility. The unpredictability of climate-related events can lead to increased financial market volatility. This uncertainty surrounding climate change impacts, such as timing and severity of weather events or regulatory changes, can cause fluctuations in stock prices, commodity markets, and currency exchange rates. This section will explore how climate change contributes to market volatility and the strategies that investors are employing to manage this uncertainty. Number 11. The role of corporations in addressing climate change. Corporations play a critical role in addressing climate change, both by reducing their own carbon footprints and by adopting sustainable business practices. Many companies are setting ambitious sustainability goals, transitioning to renewable energy, and investing in green technology. This section will explore the actions that corporations are taking to mitigate the effects of climate change and how these efforts are impacting global market and investor decisions. Number 12. The potential for green finance and sustainable investment. Green finance refers to investments made in projects that have positive environmental impacts, such as renewable energy projects, energy-efficient technologies, and climate-resilient infrastructure. Sustainable investing, driven by environmental, social, and governance criteria, is increasingly seen as an opportunity to align financial returns with positive environmental outcomes. This section will discuss the rise of green finance, the growth of ESG investing, and the potential for these investment strategies to help mitigate the economic impact of climate change. Number 13. The role of governments in climate change mitigation. Governments play a crucial role in shaping the response to climate change, particularly in regulating emissions, incentivizing renewable energy adoption, and promoting climate resilience. This section will explore the policy measures that governments are implementing to mitigate the effects of climate change on markets and economies, including climate adaptation strategies, international agreements, and national regulations. Number 14. Conclusion. Preparing for the future impact of climate change. The impact of climate change on global market is undeniable, and its long-term consequences are still unfolding. As extreme weather events become more frequent, supply chains are disrupted, and industries face new challenges. It is clear that adaptation and mitigation strategies are necessary to minimize the economic fallout. This section will conclude by emphasizing the need for global cooperation, innovative solutions, and investment in sustainable technologies to prepare for the future and build a resilient global economy in the face of climate change. Conclusion. In conclusion, climate change is not just an environmental issue, but a significant economic challenge that affects global markets in numerous ways, from agriculture to energy, from financial markets to supply chains. The far-reaching impacts of climate change are reshaping the global economy. While the risks are substantial, there are also significant opportunities for innovation, investment, and growth in the transition to a more sustainable and resilient global economy. The future of global markets will depend on how effectively businesses, governments, and individuals adopt and mitigate the effects of climate change, ensuring that economic growth aligns with environmental sustainability.